The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, everyone. Basil Chapman here on this Thursday, 29th of September. And absolutely, we want to say thank you to the weather gods for sparing the St. Pete area and for us to even be able to have a live show today. And thank you, Ella Engineer, for getting in. It's just really important that the TFNN components all fit together. So let's go straight to the market and hope that I know there are a couple of people that are still without electricity, etc. But if that's the worst thing, that's fine. But there were some parts of Florida that the pictures that we saw as basically spectators were just horrific. I mean, down south before the Fort Myers. Oh, unbelievable. Anyhow, let's hope that this gets resolved in a way that saves as many lives as possible. So the Dow's down 541. The volatility index is up 2.82 at 33, not taking out yesterday's high of 34.88 yet. Day is young. A couple of things are going on. What we were talking about yesterday in the den, because the den was still active, and me being up in Massachusetts, Newton, Massachusetts, we actually had a beautiful day. I was able to get into the den, and we were looking at different things. And most importantly, within the context of the volatility area, this volatility zone that I call the Chapman Wave Inside Track, this is a repellent zone, and it's been that way since the big spike that back up in February, we went to 38.94. That was the high. Oh, I forgot to put the date in. That's silly all this time. 128. That was the week of the 28th. And that's, of course, just before Ukraine. In other words, this was within the month of the tops of many of the indices, and yet within that there was a spike to the upside of 38.94. That was on the 28th of January, so that's 8 months ago. And ever since then, we've seen lower highs in the volatility index, 37.79 in February. May was 36.64. And I've always been absolutely fascinated. June, the week of the 17th, 35.05. How do markets know about diagonal lines? Horizontal lines, it's easy. 200, well, you come down, you wait, and you see if you can come back to 200. But 200, and then 196, and then 192, and then 186. How does the market know about that? Well, my theory is that there's a tide that's occurring. The tide is coming down or the tide is going up. And the level of the tide, wherever it is at any particular point in time, and as you're moving to the right, that's time, the axis, so the price is either dropping or the base, that is either dropping or the resistance is rising. And the proportionality of the upside move expends its greatest strength or weakness as it gets close to that line, because it's a certain percentage from the base. And it isn't greater than the original spike, in other words, 38.94. It's always a little bit less because the tide is the overall tide is going down, even though we know that prices have been going down as well. The volatility index has been doing that. So that this last move up is going to be very important, because we've taken out, so far this is on a closing basis, but it's a weekly chart. We shouldn't even talk about it until 4 o'clock on Friday. So at this particular point, what we are looking at is the declining trend line of the volatility index, the VIX index, has finally been pierced after the initial one was January, and then you've got a 1, 2, 3, 4, and a big space. And now this is the fifth rally, and this rally has gone above intra-week. We'll see where it closes. But so far, what this is saying is that the 9-period moving average has finally crossed positive. The MACD is good, the weekly chart. The stochastic is just okay at 51%. We'll have to see where it closes. And that's going to be absolutely imperative to monitor, because if it closes up in the 34 to 35.5 area, who knows, could even get to over 38.94 by tomorrow if this weakness continues. That is a difference. And that says that finally that monthly chart could in fact see a leg D. And I don't use Chapman methodology in the volatility index unless it just appears. And this would start to appear if there was a price point that goes 1 penny above 38.94 anytime in the next, well, it doesn't have to be this month, it could be any month, but in the next move up. And we'll be watching that. The last one failed at a peak C, the coronavirus, business, Fed, everything. That was the March 2020 high of 85.44. All right, let's get back to the story of the market. So this volatility index up to almost $3 at 33.10 right now is suggesting that buyers of the insurance or as a trend of the volatility index are the rife. They are there. They're holding the market up. This is the VIX, the volatility market up, and that is putting pressure on the general market. Now let's just run the numbers. So the Dow right now is down 570. Yesterday was absolutely a fantastic move, but it was definitely short covering. But there was some evidence. Now, I'll run. Now, I think I should finish this first. Finish this first. 29,117 right now. Very ugly session after yesterday, suggesting that it was just a fake out move on the upside. For subscribe to my opening call, we did go long yesterday. We've taken profits on that. But we attempted a long position in the QQQ this morning with less than a 1% stop. It looked as if it was just building a little bit of upside action. Boom, it got knocked down, and they were out. And as far as the general picture is concerned, we have some of the least number of long positions we've had in ages. We've built up a very big cash position. We're still short the Dow from about the 33,300 level. And we're trading right now 29,096. The big picture says we're not done with the downside. There are just too many things. Now, I wanted to show you this. We'll do the S&P. Pretty much the same thing, except the S&P has now gone down. There's no H. So that was a G/C, and now we're in a leg D to the downside. So I'm going to just put G right here, G on the way down, G/C. And now that's an alternate count, and here comes leg D. All right, leg D, the on-balance volume was oversold and still is oversold. Doesn't matter. That MACD is very weak. It's down 7%. We'll do the as we're about to go to a break. 1, 2, 3. This is Basil Chapter 5 for the 29th of Thursday, the 29th of September. The Qs are down 9 at 270 with a new low. I'll be back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Let me just answer this question because I think it's actually it's important. We've got let's see, question that came in about. Basil, can you look at mRNA, Myrna, that's Moderna, Inc., Biotech, COVID, many other trials going on, and that was on the way up. When it hit 497.49 in August of 2021, it started a decline, and I call that the Eiffel Tower. It looks like an uppercase A, straight up and straight down. And it's making a lower low today. It hasn't taken out. Has it taken out? Yes, I think it has. The low of the 24th of June, the week of 24th of June, 126.59. Oh, my. It's at 115 right now. Yes, it's taken out that left side dreaded H pattern, and it's got the Eiffel Tower. So that's a different story. But when you look at stocks like Eli Lilly, look at this. Eli Lilly yesterday made an all-time high. Leg E in the monthly chart, I don't know if I can call that a G or whatever in the weekly chart, and a big spike up, and it's given back a little bit of that spike. I suspect it's going to fill the gap a little bit more, or BIIB. This is the biotech, Biogen Inc. News yesterday. Was that the Alzheimer's news? Huge spike. It's trading doodle in the 195s, and then suddenly in one day it hits 280. It goes to the 280s. It's trading down a little bit today, down 12 at 263. See, these are news stocks. They have a story that is a forward-looking story. So anytime that they just dawdling and they're just kind of hanging around in the lows, they can come up with some beneficial news story, or beneficial to them, beneficial to the general populace, hopefully in the end, and then spike. So that's a very different story. Myrna at this particular point isn't coming up with anything that the market really wants to hear. I think they will, maybe within the next 6 months or so. They have 13, 14 or something like that, potential new products that could be viable, but so far they haven't made a big deal about any of them, enough for the stock to move. So I just think that if I don't know if you're short or long or whatever it is, but on the short side, Myrna is highly vulnerable if it closes on the week anywhere below 113 in the next, between this week and next week. Why? Because all of a sudden you don't have very much support until the little chuff that was made back in January at 102.66. So something, you have 2 weeks in this dreaded H pattern that's been made in the weekly chart in which to close above the left side low, and that's the low of 15.61 made the week of the 17th of June. So we were watching this, and since it's gone below, it means that the resistance levels at the 9 and 14 period moving average, or a gap or a doji, in this case I'll say 137 to 142, the resistance is intense. So a couple of things going on right now. I didn't finish. I wanted to show you. So the bonds. James bonds. We're looking at 126 and 1732 seconds, 30 seconds, down a dot, 1.532. What this basically says in the monthly chart, I wanted to show this. I don't know if I mentioned this yesterday or the day before. In October of 2018, bonds were at 123. They skyrocketed. Let me just double check because this is a continuous contract. 123, 30, 124, and 630 seconds. So let's just say yes, in the 123s. Skyrockets up to a peak D, fourth highest peak within the Chapman wave. We're always looking for 4 higher peaks in a buy mode. At least they could go high, but at least 4 to a peak D. 183.18, 30 seconds. In March of 2020, that was the market low, and that was the bond high. And it's been coming down. You see this arch formation that came down sharply. Well, we've done more than a 1-to-1 to the downside, but that 123 low that was discussed just moments ago, 123 and 30 seconds was the low yesterday. So it's done this full retracement, an arch formation. It's done it in a longer period of time from the way up to that peak D. So in a sense, that says it's just working really hard. It's not just a smash to the downside. But most importantly, what we're looking at here is that as long as I can remember, and I've been in the market many decades, I don't ever remember bonds when the general market is tanking. We're not crashing. We are just making lower lows and lower highs and persistently lower lows. That's a big difference because you're not using the speed. You're using up time to come down, and using up time says that the energy that's expended is just, there's a lot of energy. I don't want to talk about it as a hurricane, but there's a lot of energy there, and you've got a lot of time to use up all that energy. Whereas if you get a crash like in 1987, that was 6 weeks ago, from August to September, and then smashed to October the 19th. So it was a period, I think, as I record, was 6 weeks and then 6 weeks again to the low. That used up price more than time. Here we're using up time, and that's when I've been saying that I don't think when people talk about a crash to the downside, I think in many ways this is in a crash. I love a crash because why? The moment you're done, you are done. You can start looking at the tide has turned. You can look to the upside. In this particular instance, it's like they're rip tides, and it doesn't explain to you that the tide itself is still going out. Remember, I like to look at the market as a tide. I grew up as a preteen, Cape Town, South Africa, right just on the beach. And I watched the ocean, those huge monster waves that used to come in the springtime. And I'd seen boats that got smashed up. I'm a great fan of waves. So the Chapman wave is the waveform that never sleeps. And as a result, I monitor it a lot. And I think that what I'm looking at, and one of the reasons why I haven't found any stocks, we did put in a buy this morning for a particular oil, energy-related stock. It had a nice run-up, but I put in a pretty tight stop. We've had it before. It was very successful. I don't know if this is going to be successful, but at least I want to do, it's in an area that says to me there could be some activity. So, and if it gets stopped out, it gets stopped out. But mostly I don't see, look, when I would love to grab a brokerage type stock, because that's what really succeeds when this market turns to the upside significantly. But look at the IAA making lower lows, it's turning around, making that arch formation. This is the broker dealer ETF. Look at the XLF, which should give you some strength, almost taking out the low of 2 days ago, and then in the arch formation in the weekly chart. These are really, for me, important components of the general market, and they are very weak. And therefore, I see no rush into just going full hog into any individual stocks. Yes, you can take an index if it's starting to use it as a percentage gainer, but this is a very dangerous market. The tide is rough. I'll be back in a moment. Dow's down 574, S&P's down 91. Basil Chapman live on this Thursday, 29th of September at TFNN.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I was saying that then I had a question about I'm long cold from the pre-teens, KOLD is the it's called the ProShares Ultra Short Bloomberg Natural Gas Contract. Thoughts on it and natural gas. So I've been looking at natural gas very closely over the last week and a half. Well, basically since we were stopped out of our NFE, which is NFE is the New Fortress Energy Inc. A natural gas fuel solutions, and that made a peak E at 63.06. We were long from about 45. And we took quite a bit off. Eventually, we got out of it. and we're just watching it. Well, it went to the 200-period exponential moving average, but I don't see any real sign of strength, and that's fascinating because, look, NG, natural gas, with all the talk that's going on and fuel lines that are blowing up, all sorts of things, we've made a peak E in the natural gas at about just over 10. That was back in August, and it's gone under the 200-period moving average. It is in a leg D. It'll absolutely make, there's no way, unless something spectacular happens between now and 4 o'clock tomorrow, this is going to be a peak D in the Chapman methodology. Peak D, the fourth highest peak, that's your target in a buy signal to buy mode. It could go higher than D. It could go E, F, and G, but D is your first big objective. And lo and behold, it makes a D, and then it gives a huge red candle at 6.688 right now. So I think you're absolutely correct. For this, I think you have to, you know how I like to talk about VIXY, Dolly, Bondy, Goldie, this, I talk about these major sectors, gold, dollar, Dolly, bonds, Bondy, oil. Try to think of them separately for a while. For 6 or 8 months, I've been talking about it, saying that the synchronicity of the inversion for dollar and gold, or it could be sometimes oil goes up, natural gas comes down. All of that's just gone out the window. We've got fluctuations, volatility index. I was just explaining to you that the volatility index has gone down since January to lower highs in all this, and yet the market's going to lower lows. So you've got to think of these in a very independent way. There are times where they were linked, but for a long time now they're not. So the answer to the question is very simple. If you're long from the pre-teens, we're in leg D right now. I wouldn't do anything other than just as pure money management to say, when you're getting to a leg D, why don't you check out the left side high to see if there's a time symmetry bar. You remember I like to look at bar symmetry. Well, the bar symmetry, it's gone above. The only thing I can look at now is the gap up, the gap down on the 15th of July, 21.52 in cold, K-O-L-D, cold. That's the inversion of the natural gas. And what we're looking at is then the next day, the high was 20.32. But the following day, the high was 20.94. So that 20.94, when I draw a trend line now, I like to bump into the wall behind it. So that means I'm going to go right to that bar. That's the gap, the bar that started the gap down. I'm going to go to the midpoint. This is the left side, right side price time match. That means you've got bar symmetry. To me, it looks like we've already used up the time. We're very close to the right side in the number of bars. I'm doing this visually. Now we'll do it just, there it is. So now let's see where this takes you to. And that says it takes you to, as I said, we're very close. It takes you to 9:30. That takes you to tomorrow to get to this high of 20.94. Well, the high today is 18.18, and the high yesterday was 18.18. Same thing. So now I draw the left side, right side price. This is the inside inside wedge target resistance line. And there's no. You could stress this a little further. So the trough, the plumb line at the bottom, which is the day of 23rd of August at 9:06. This is not the time. This is the price. Could go a little further. It could even go into next week, the 4th of October, sometime by maybe Wednesday of next week, to get to that level. But it is a leg D right now. So all I can say is money management says to me, other than just pure money, trying to manage your money, I would say you could take just a little bit off right now, or you could just say, I'm staying in, but I'll raise the stop on a particular portion that I would normally take off. I would raise that to maybe 16.65, make it fairly tight. So you lose 25 cents. Now you got to say to yourself, do I get out here at 89 cents, 17.89, when in fact it might even spike higher tomorrow? or do I just put in a stop and say it'll be 25, 30 cents lower than where it is right now? My thinking is that's to do with you got in, you've made a fabulous trade. I don't really want to tell you what to do. I'm just suggesting that just in terms of money management, that's all. The MACD is good. Stochastic's flat at 86. You love that. On balance, volume's already pulled back from being a little overbought. 9 is way above the 14, and the price is way above the 9. It's above the 50-period moving average. There's nothing here that says, oh my God, take your profits. It does say, money management says take a little bit off. You can even say take a little bit off, and I'll just set it aside, because if it drops to 1571 and the technicals are still good, maybe that's where I could put it back, somewhere around there. So that's what I'm suggesting. I like what I see. Now, this is what I like to do. Let's go to the natural gas contract itself and say, wait a minute. Didn't this make a peak B, and there's no other way to count it in the weekly chart? And absolutely. So this peak B fails if it takes out the low of the week of the 8th of July of 5.355. At this particular point, my thinking here, based on what I'm looking at and based on the pattern that very often makes this V-shaped pattern, then pulls back, is that we've taken out the midpoint. So you have to consider that it could slide a little bit lower, but that 200-period moving average in the daily chart is still a magnet at 7.014. So that's what you want to see. If natural gas pulls back to 6.43, it moves far away from the 200-period moving average. That's kind of what you want to see for your cold position. And that's the only reason why I say money management says take a little bit off. I would still try to stay in the long position. Let's go to our caller. I'm going to check out who have we got. We've got George in Boston. Hi, George. How are you doing?
Good, Basil. How you doing?
I'm doing well, and I did quite a bit of work on your, I think it was Friday, a week ago, right? Sometime, yeah. I think it was Friday.
You sound better, Basil.
Thank you. I feel so much better. Unbelievable how scratchy that throat was.
Good.
Yeah.
The reason I'm calling Basil, I've been looking at the wave count on the spiders and the SPY.
Yes. Correct. Yes.
And every single time it's come down in the last, say, close to 30 years on the wave count, when it's come down to a C, it's either gone a lot lower or it's bounced. Now, on a couple times it went to a C and it bounced, there was always a positive, like a positive candle on the monthly, on the B. But every time it came down with the C the way it is now, it looks like it's going to be a C regular candle. It's always gone a lot lower.
So, okay, let's hold on. Let's go through the break. I'm going to do a little bit of work while we're in the break, because you've brought up some really important points on the spider.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, folks, we're back. The Dow is down 554, S&P's down 89, and we have George in Boston on the line. I hope he's still on the line. George, you there? Is George there? Did I just hear something happen to George's phone? Oh, no. George, call back. We need you. So George was saying there have been a couple of times where you've gone to a trough C in the SPY. One was the low that was made March of 2001, where it went to 108.04, had a pretty nice rally, and then went to a D, had a pretty nice rally, and then went to an E and an F, and finally made a low in October of 2002 at 77.07. Then there was a spectacular rally. You remember, I love this left. George is back. So, George, we got a trough C in 2001. It was a rally, and then it failed to win to a D. There was a rally, failed to win to an E and an F very quickly, and then started that huge move on October, the month of October of 2002 at 77.07, and screamed up to 157, a double at 0.52, and that was the high that was made October the 31st. That was October of 2007. And then we made a trough A, trough B, and a trough C with 2 months that tried to rally and then failed. And we went down to a D and then an E with a low of 67.10. The big question is this a repeat? Now, one of the things I wanted to mention was that Chapman wave Roman candle that I discussed. There was one, well, we weren't on the air at that time, but I had my Chapman wave, my market line subscribers. Back in April of 2000, there was a doji candle that looked like, I hadn't really formulated this technique of the Roman candle, but it was a very negative candle with a long wick, which eventually took out. But my big thing was in November of 2007, Chapman wave Roman candle, we've got to be really careful, because if there's a lower low and it takes out the low of this candle, we could go down a lot more. And that's kind of the same reasoning I had when we made both the candle of August of 2015, that's a Chapman wave Roman candle, and the Roman candle at the very top at 479.98 January of this year. There's a Chapman wave Roman candle, and we had a one the following month, and now we are making this leg C. So, yes, you're absolutely correct. When it has made the trough C, if there wasn't a spectacular turnaround, there was a chance that you make a rally just like we've had for maybe 2 months, and then we make a lower low. So I'm watching that very closely. Anything you could add?
But my question is, though, Basil, it's come down to a C.
Yes.
And every single time, even when it went lower in 2000 and in 2008, right?
Yep.
You always had like a positive candle, and then it fell apart.
Yes.
But what I'm saying is that if you're running into the month of October, and I don't see it rallying with a positive candle in that month. So what would happen if that leg C comes down to another large negative candle, continues on that leg C down? I don't think you've seen this in 25 years. And the other thing I'm looking at is that when I go to the big cap stocks, which have not followed suit, I'm looking at Apple. It's on a leg B down. Microsoft's on a leg C. Google's leg C. Amazon's a leg B. Berkshire Hathaway's only on their leg A. Johnson & Johnson's only in their leg A. So, and Walmart's only in their leg A. Procter & Gamble, leg B. These are all your large cap stocks. So what I'm looking at is that these haven't really taken a hit yet. So what I'm saying is that if these start to follow suit with the general market, Apple's only in a leg B, then you have a lot more time and price.
Correct. There's no question. Correct. And here's the other thing. For the first time since it turned positive, the green 9-period exponential moving average, this is just, it's uncanny how this happened. I might be off a month, but about April of 2013, in the Chapman methodology, the 9-period exponential moving average crossed over the 14-period moving average to go green. It has not had a pink bar since this month. It's just crossed negative, so we've still got until 4 o'clock tomorrow. But so far, this is the first time you've got an S, which is basically a sell or a short in the monthly chart. I'm looking at Microsoft. But if you go to and the question was the S&P, the only time if I remember correctly, there was just one bar in January of 2019, and let's say maybe I'm just, no, not even that. So since the crossover I think it goes back even further. Yes, the green crossover in October of 2011, not once, and I need to double check, but if it was no more than 1 month, has the 9-period moving average, which is green if it's above the 14-period moving average, gone pink. And this is the first time. The month has still got another day and a half to go, but this is the first time that it's gone pink. I respect that, and I've been waiting to see if this would change, but in fact it got worse over the last 2 weeks. And this is a big concern of mine, because if you look at the MACD, you see the width of the monthly MACD, the way that's the 9-period differential, that's the red line. Oops, that's the green line. The 26-period exponential moving average is the red line. Look at the distance. The histogram is still expanding, the distance between these moving averages, and the stochastic's only at 26%. I suspect it will be in 2009. It went under 10%. So was it under 20% or was it just under 10? Let me just check. It went down to 9.42%. Yes, it went under 10. So there is plenty of room, and that's the reason why I've said that every single index has made a D, E, F, or G in the monthly charts. Only the S&P has made a peak B. There's no other way I can count it. So it'll be a really unusual situation if it fails, but the only way it fails if it takes out 2191.86, the low of March of 2020. But doesn't mean to say it isn't a horrendous decline. I'm just saying the Chapman methodology, it could restart and do another peak. ABC could even make a D underneath that B. But normally you would not fail in a monthly chart in any of the big cap stocks or the big indices and a B, it's been very unusual to do that. So you're bringing up absolutely salient points. To me, the biggest thing is this. In all the years that I've been in the market or followed the market, I don't recall a time where the bonds haven't been the security, the safety. You know, the rule used to be that you go to bonds in a declining market for safety. Bonds have been smashed at the downside. There's a big difference here. So, George, I agree with your comments. We're going to be watching this very closely. Thank you so much for calling.
Thank you.
Thank you.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. A question, could I post a Netflix NFLX? Oh, I didn't even check that. I'm sorry about that. YouTube. Oh, I didn't even check that. Is there the comments? Yep, there is. There's a bunch of things going on. Yeah, okay. So what I wanted to say is that Netflix was looking terrible. It made a peak D and then plummeted. I think it's in a trading band. And I think I'd mentioned that earlier, that I think that the trading band is between about 215 and about 245. It's actually a little higher than that. It's gone to 247 almost today. So that says that there is some buy. Now, this is what I wanted to say. Just as we're about to wrap up, we've had all the negativity, but I also want to mention that if you're looking at stocks that have been absolutely decimated, like a DocuSign, I haven't looked at that for a while. I just thought I'd bring it up. There is no question in my mind that at some point, just in terms of value, that some fund managers will start to say a stock that was at 314 that's trading at 53, there must be some at least counterintuitive a market here that's viable, and that there should be in Shopify. All of these stocks that have just been absolutely, Shopify, a new low today, unbelievable. 176.29 down to 27. And it's already had, a 10 times split. I don't know what it is. So, yes, I think that these stocks are going to have a pretty decent bounce at some point. But I think at this particular point, you do have to consider these are bounces. And that's why I'm saying if you want to go long, put in a tight stop. We got 1%, 3% stops. If it works out, you can make maybe 6 or 7%. But I don't think at this particular point you can get anything other than be nervously long. I think that's appropriate. And at some point, it's going to work beautifully. But it doesn't matter if it works beautifully. You don't have to be overly in too many positions for it to work. You just have to be in the right position, garner some kind of profit, take it off, and try to build up a kitty for the bad times, there's still going to be bad times to come. Have a great rest of the day. I'm hoping that our guests are going to be our hosts are going to be able to come in to fill in the time here at TFNN. I'll be back tomorrow. Have a wonderful